you that investors have craved reassurance that the economy was at least hanging in there. Once we've gotten and digested the notion, as Steve's been reporting, that there was a lot of resistance to the idea of a December cut, once those probabilities came down, well, you want to make sure the economy was not also sliding at the time. Of course, this is old numbers. It's September. It's not dispositive. But I think it's worth noting that this is the economy that was in place when we had the meeting for which we heard the minutes yesterday. So this was the economy they were sort of responding to in general. And I think it makes sense that we're kind of in tune here. And the September projections by the median for unemployment by the end of the year was 4.5%. We're not going to know if we're there or not, but I think we're sort of still within the bounds of what was expected to be the economic conditions at that time.
Hey, I want to go back to Rick for a second. Rick, just the unemployment rate ticking up 4.4% versus 4.3%. You pointed to that as something that might bolster the Fed's case, but you don't think they should be listening to that either.
No, I personally think that as much as Mike is right, that this is a bit of a rear view mirror number, and it does kind of correlate with the minutes to the meeting that we had yesterday. I think there's a resurgence of economic activity. And I know that there's lots of anecdotal data that goes both ways, but I think it's possible that we're seeing jobs deteriorate and then come back a little bit. And I think with regard to the economy in general, I'm very optimistic. Now, just because 4.3 to 4.4 might bolster the probabilities, as Steve pointed out, in a small way, I would acknowledge that. But I think in the grand picture, Mike's nailed it, that between NVIDIA and the state of the economy, the turn that we are seeing now in markets is, instead of only looking for easing from the Fed to be a big positive to bolster prices, we're now seeing that an economy that isn't sliding is a positive, and it might give us solid rates that don't go down, and it might give us better numbers on the equity side.
Hey, Mike, characterize your thoughts on the volatility we've seen in the markets with all the concerns about what NVIDIA might say last night, then the relief based on what they did say, and what that means for the broader markets.
Well, there was obviously a reset in attitudes toward AI, the risk-reward perceived in the market. There's a lot of froth that built up into the late October highs in the market. A lot of that has been flushed out. And NVIDIA's numbers, I think, first of all, reinforce confidence in the AI hardware food chain, the infrastructure trade. That's what you're seeing going up. I would point out, NVIDIA's bouncing back to levels we were at 10 days ago. Okay, the S&P is going to bounce to levels we were at like last week. So it's not as if we're up and away again, but it's reassurance based on kind of building up of anxiety around the sustainability of this spending. What it doesn't answer is the outlook for all these companies that are giving NVIDIA all these orders and bolstering so much free cash flow in NVIDIA's bottom line. So we still have that debate out there as to whether it's building towards some, perhaps unwise or ill-advised investment, but we're not close to that moment of reckoning, and I think the market can sort of say, okay, we had a 5% pullback in the S&P, a little bit deeper in NASDAQ. We had Meta go down 25% on these concerns. Oracle's 35% off its highs. Microsoft's lost $600 billion in market cap since late October. Maybe we've priced in a more cautious outlook, and we can have a relief trade here in the Mag 7 at the same time the economy maybe is going to hang in, because there has been unease about the consumer cyclical parts of this market. So I think it's more we can find some traction here and feel as if things are not worsening in an observable way.
Steve, really quickly, we've got to run, but we've got Roger Ferguson next. What would you most like to hear from him?
It's the read of the household report that I'm trying to dig into right now. And I don't see, I saw the participation rate go up. Part-time for economic reasons went down. Those not in the labor force went down as well. The Fed's going to look to the household report for signs of tightness in the labor market or looseness in the, just how much slack is there. So that's, I think,